Good afternoon, everyone, and welcome to the Daily Volatility Box Report for December 9th, 2019. We are TOSindicators.com, home of the Volatility Box. For today's trading, we'll start by talking about copper. And I think copper was the most interesting ticker today. Most everything was a little bit more flatlined for the most part, but copper is where we had some interesting entries. So let's zoom into today's activity. We're on a 3-minute chart, and we'll go through this the way we approach all of our charts on every single day's trading. Right? We start by looking at the first full hour that the market's open, whether or not that's the last 45 minutes, whatever it is, but really that first full hour. So in the case of copper, we see that that's between the 5 to 6 a.m. mark Pacific, right? And so in that mark, we take a look to see what kind of volatility we've been seeing in copper. Now, something we noticed in copper is that we did breach both sides volatility box, and so we essentially made the move from one side to the other. But what we also noticed is we did in fact have that opposite and equal reaction on the downward side. And so this gave us the confirmation that we were in fact respecting the aggressive volatility box, and that if you were a more aggressive trader, then you had permission to continue to use the aggressive volatility box for some entries. Now, with that knowledge, we started looking at areas of potential entries that we might have. Now, something to notice here is our first entry really was as price slammed into our volatility box. And this was a short here. That was the first trade that actually set up. Not this trade right down here, since we continued to make a higher high, but it was a short that actually gave us that first entry. And subsequently, that short then was stopped out shortly thereafter as price continued to move upwards, giving you sort of that idea that we're in greater than usual volatility or that there's more of a bullish bias confirmation, right? And if we then use that to observe what actually happened the rest of the day, for the most part, we ended up staying sideways to up from there, with the slight exception right down here where we fell slightly below, but this is an after hours market activity. And so I think this is where, once again, you can use the volatility box as information. You have the opportunity to use these levels as means of then making decisions off of those levels, understanding, okay, are we respecting volatility? Are we in chop? Are we in trend? Which essentially market posture condition are we in? And this is where you can also start to augment things like the market pulse indicator to get a little bit better of an idea. But that's the one trade that populated in copper. Now, another trade that we'll take a look at is in ACAD, and this is ACAD Pharmaceuticals, and we'll go through the activity. So on Thursday, we had a nice gap up, and then after that, we ended up making a move down. ACAD did give us what would have been our entry, but we also see that we breached outside of the volatility box here, giving you that first bit of sign that using the conservative volatility box was the better suggestion. So let's take you through how we would have run the conservative volatility box for ACAD, and then we'll use that to determine if there were any trades that populated on any of these tickers, right? And so the way we run our volatility box is we come into our volatilitybox.com website, and we'll bring this over to the side. And here is where you can input all the tickers, right? And so we had PD, Big, Airy, Zoom, Stitch Fix. We'll skip VIAB. We had CCXI, ACAD, and CRISP, right? And so now, once we input all these tickers with comma delineations, and once again, for members, you can now put in more than 10. It's completely open up to you. Just I'd limit it to 20 just for the sake of Thinkorswim and based on the RAM capacity on your computer, not really based off of our platform anymore. There you have unlimited. If you wanted to run 100, in theory, you could run 100. It may be worth it on your side to test out if that slows down your platform or not and base your decision of where you'd like to cap out your file at. But for us, we'll run just the tickers that populated in our scan, the 5.75% move. And like that, one of our members, Dan, had mentioned you can also use something like the Investors IBD Stocks on the Move, another free scan. Really, there's plenty and plenty of opportunities. Don, you sent us a stock on the watch list, XLE, so you can already have, say, all the ETFs run. You can run whatever you'd like for anything on the New York Stock Exchange, the NASDAQ, and then the MX, which is really where all the ETFs are housed. So once we have all those indicators in, we'll now click Generate Indicator. And this now gives us two files that we can download, both our aggressive and our conservative volatility box studies. So originally we said we wanted to run our conservative volatility box for ACAD, but let's go ahead and download both the files. So we'll click each file, aggressive, and it's downloaded right down here. Conservative, same thing. And now we have both of these files that we can open and import these studies into Thinkorswim to start to look at the volatility box for all of these indicators that we care to look at. So we'll start by looking at the conservative for ACAD. And once we bring in our conservative study, we can see up here that it's on the conservative note. Let's actually get rid of our volatility box for future studies for the time being, just so the labels are cleaner. And now, using our conservative study, since we have this massive gap up, we can take a look and see that the conservative study is capturing volatility in ACAD pharmaceuticals quite a bit better, right? In fact, it's these dashed lines that we're seeing time and time acting like sort of that area where price is starting to exhaust. And keep in mind, this is the dashed line on the conservative study, which is already very conservative as it is. And so taking a trade off of our normal entry, which is the beginning of the clouds, is really most ideal. But for those of you that are a little bit more aggressive, you can start to notice how this sets up far more opportunities for you, especially if you're using something with a defined risk strategy like options or even stock for that matter. You have a lot more power at your hands, right? So here we can see we fell into that first level of zone that we've talked about where we expect price to start to exhaust. Our RSI candles shifted from red to orange to yellow. This candle was your first confirmation, and after that was your sort of okay, if you'd like to take the more aggressive trade, scale into a third of your position, really whatever's comfortable with your risk tolerance. But that's where we had that opportunity, and we can see what happened there on out, right? If we now zoom in, and for those of you that are swing traders, let's take a look at the next day's activity. You had a really nice burst up move higher with the open, right? And a lot of you have sort of wondered, and I know I was like this before as well, and it's all about observing patterns, but it's how do you find these tickers that are going to start the morning basically ripping higher? And we've noticed that a major pattern that in which this happens is where the day before we've made a move that encompasses essentially the entire day's volatility, and price starts to stagnate towards any one of these ranges right down here, giving me the idea that price is exhausted, and if we are in sort of an uptrend, you'll seize that immediate bounce that we're looking at usually from that level that we had originally pointed out, right? And so using this, we'll now look at another ticker that will bring back our aggressive volatility box, close this out, and now we'll go to big lots. Right, and so big lots, something similar. Now, big lots will start with the aggressive and once again make our move back to the conservative, but we see that we had earnings here in big lots. And usually earnings is my sign to be a little bit more conservative. There's plenty of areas where you can look at for opportunities, and so why be a little bit more aggressive where you don't need to be aggressive? And so in the case of big lots, we'll be on our conservative study because we had earnings. And this is in our Insights tab for those of you that are Stock Volatility Box members. You've already seen this plenty of times or in that 42-minute intro video, right? And so now if we load up our conservative study, we notice with the aggressive study, we really just went to both sides clouds fairly quickly. Now we'll get rid of our aggressive and we'll bring in just our conservative study. Now with our conservative study, we see the pattern that we've talked about time and time over again, right? And it's the idea where if you've made this move where you essentially went from our starting point, which is right down here, to the end point, which is really the upper bound of our range where we expect price to exhaust. We didn't breach the clouds, not giving us, essentially preventing us from taking that fade trade, but we did get confirmation that big lots had essentially made the entire move that we thought possible. Then this is where if the next day we break above what would have been our stop if we had gotten a fade, then that gives us much more confidence and confirmation in the fact that big lots is on an upwards trajectory, right? And that's exactly what happened here. From our point of entry, which is really the stop from the previous day, big lots continue to make a move up higher of about 4.96, let's call it 5%, right around $1.30 on a 26-ish dollar stock. And I think that is what's incredibly powerful. There's quite a few of you that like to say play trends as opposed to fades. I know a few of you have even talked about how scary it is to say short while price is moving vigorously in your direction. Well, this now gives you another opportunity, another completely different type of trade that may fit your trading style a little bit better. That's where if you're a trend trader, a fade trader, if you like, say, knowing what tickers you'd like to look at in the morning, if you'd like to take existing lists and just look at those for opportunities and just stay focused, whatever your trading style is, the Volatility Box has a trading method meant for you. And I think that's why we as a community are really keen on making this indicator something that's a little bit more prominent where folks can start to understand the multi-purpose power that it presents to you in your trading arsenal and why it really is truly the most powerful tool that you can have as opposed to any moving averages or anything of that sort, right? Especially those other indicators that quite a lot of you pay good money for because you see one or two trades work out. You can take a look at our history and you've seen just how many times the Volatility Box has given you trades that's worked out. Before it was only for futures, but now it's also for stocks as well. All right, thank you all for listening to today's video, and we'll see you in tomorrow's nightly update. Take care, everyone.